Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, and this video is not financial advice. In this video on a Sunday morning, I just want to react to some of the talking points that Tony Denaro shared as he was reacting to my video about GameStop's trading floor. And Tony, I'm not super familiar with your content, so if any of my followers do or don't like Tony, I'm sorry. I want to say thank you, Tony, for covering my content. I appreciate it. And I felt like he did a very respectful job. I felt like you were super respectful, super, um, courteous. And I don't really want to react to Tony in this video. I really want to react to the talking points. And I want to talk to you guys as my audience. And also, if there's any overlap, if there's anyone who's a Tony disciple that wants to hear my take on what Tony had to say, I want to clear some things up because obviously Tony hasn't watched every single one of my videos on this channel, and Tony's audience probably hasn't either. And so I want to kind of, at a high level, kind of gloss over, or not gloss over, but speak to some of the kind of counterpoints or objections that Tony shared in that video. Before I get into it, just want to say thank you to the subscribers. We've got about 200 spots left in the Halo Sub Club, the March to 2525. And I'm starting to feel like, man, maybe we could get there by earnings. And if we get there by earnings, hey, I want to live stream my reaction to GameStop's Q3 earnings because ultimately this conversation from Tony and this conversation about GameStop, it really comes down to these Q3 numbers and beyond, aka Power Pack's revenue and Power Pack's margin, that we have a pretty high clarity on revenue, in my opinion, based on Cohen's statements. We don't have any clue really what margin could be. I mean, we do have clues, right? It's probably somewhere between 5 and 15%, but that's a huge swing, right? Whether it's 5 or if it's 15. I've estimated that it's 10, but we'll see in Q3, right, how accurate my projections are, what those numbers look like, and what that implies for really the coming years ahead for GameStop as it relates to Power Pack's growth, and then, of course, the console cycle that they are just on the cusp of. So, that said, thank you to the subscribers. And if we hit 2525 by earnings, I will be live streaming their release of those Q3 numbers and my reaction to those numbers. Also want to say thank you to those who joined the channel as fans and friends. I appreciate the support. All the earnings of the channel go to DRS Book GME shares, and I appreciate it a lot. So I'm not going to play Tony's video. I'm just going to, by memory, try to speak to a few of his thoughts. And I think the big picture I would want to say is what I landed with, and he was watching my video live, but what I landed with is if you want to say that GameStop right now at $9 billion dollars is fairly valued, you can make that case if you want to look at GameStop through a very bearish lens, but that case won't last for long. So the reason it won't last for long is because GameStop's earnings, their operating income from the past is basically obsolete, right? Even their Q2 numbers, which is a huge swing, right? Q2 numbers, the change in operating income was a 400% growth year over year. And even these numbers are obsolete, and they will prove that when we come to Q2 of next year, because in this quarter, we did not have any power packs, right? And of course, we didn't have Lego either, and we didn't have any of the other new hardware and the new consoles that are coming out, right? The new Steam console, the new Xbox handheld, and then, of course, the next gen PlayStation and Xbox, which will be coming out. In some at the end of this year and next year and the year after that. This is not a floor, right? This operating income. And it is not speculative to say that GameStop's operating income will be higher than this a year from now, meaningfully. And then again a year from that, meaningfully, because the GameStop is selling so many more products than they were here. And we know that the life cycle of a console for all different consoles, it is a ascending sales curve for years, right? Year one, year two, year three, year four, as far as the revenue and the units sold of a console. And so, particularly when you want to go back to Q1, Q4, Q3 of last year, these numbers don't even have the Switch 2 or the Power Packs, right? So, when you think about GameStop's valuation, I think me and Tony are not really viewing GameStop that differently. And if you're a Tony disciple, basically his stance is more or less, I'm not gonna, I don't believe any of these numbers until they happen. I'm not saying he personally doesn't believe it, but he doesn't want to value GameStop based on anything other than what's already been recorded. And the reality is that we know GameStop's going to make more money in the coming months than they have in previous months, right? It's not like I'm not a GameStop pumper, right? This isn't just me wishing upon a star. Like the Switch 2 is selling hundreds of millions of dollars, and it will continue to do so for years, right? And then all these other consoles are coming out and they will also sell. The big X factor is power packs, which, if you follow GameStop, you know Cohen said their collectibles division is on pace to be just about a third of total sales for all of 2025. So again, if anyone has the opinion of I don't want to bake any of that in right now, I only want to see it after it's reported, and then I want to start considering it. I respect that, but the implications are that your valuation for GameStop is about to sharply increase, right? So we could, I don't even really want to argue about is GameStop fairly valued right now, because if if your position is that GameStop right now is fairly valued, then your position is also that GameStop is about to double or triple in value over the coming years. And the reason for that is their operating income is going to grow from currently their trailing 12 month is 100 million, and by the time Q2 numbers come in for next year, it's going to be closer to 600 million, right? A 6x of operating income over just 1 year's time. So for me, I have a high level of clarity for that, and the clarity is is not hopium, right? It's his for the consoles, it's easy to look at what Nintendo is communicating about their console sales. It's easy to look at historical console sales curves. It's easy to see the other console makers announce consoles, right? Like, and it's easy to look at GameStop historically and look at their revenue during different portions of the console cycle. And the reality is, GameStop in 2024 is selling consoles that were 5 and 7 years old, right? There weren't the Switch 1 came out in 2017, right? The Xbox and PlayStation came out in 2020. Like, of course, their sales numbers were down, and not to mention they closed a lot of stores over that period of time as well to cut costs. And so, with a increasingly with with a store count that continues to decrease, costs that are continuing to come down, combined with products that are highly desirable, that are um, available for sale right now and selling very well, combined with a CEO that's confirming that they are indeed selling incredibly, incredibly well. Again, it's just not for me, right? I'm not arguing that this is how GameStop has to be valued, or that like I'm not trying to say this is what Wall Street thinks. I'm trying to think this is how a normal human being thinks, is that when you know with a high level of clarity that operating income is going to 4x, 5x, 6x. What do you want to project it at over the next 4 quarters? Then a rational person would start to price some of that in instead of saying, oh, well, right now GameStop is fairly valued if you just look at their trailing 12-month income. It's like, well, look, their trailing 12-month income is obsolete, right? It really is. And even if you didn't want to factor in power packs, right, that's just a $20 million swing to my projection for operating income, right? Of this, 1.3 in sales, 200 of that I have according to Power Packs, but I only have a 10% margin on that, right? So their gross profit margin, if you think GameStop's going to be at 1.1 instead of 1.3, that because you don't believe in basically Ryan Cohen's comments, you think he's lying and you don't think Power Packs is going to do anything, that only takes down their gross profit by $20 million, right? So then, okay, great. So operating income is 122, right? So again, anyone that's reasonably modeling this is like, okay, this is about to go up a lot. And so for me, I would say I would value that right now. I would not wait for that to happen to then value it. If you want to value it kind of conservatively right now, fine. Like you don't want to fully bake in the base case scenario, the best case scenario, fine. But to refuse to bake in any of the growth to me is um, it's just a high risk that you would miss out on the appreciation that's coming on the stock. Another comment Tony made is as it relates to this cash, like I'm saying, okay, $1 billion is like the minimum present value of interest that GameStop's going to receive on their cash position before they owe it back. And so, like, you have to value this, right? And Tony's comment is, but they haven't made it yet. And it's a similar sentiment, right? A lot of people have shared this. Say, hey, you can't like this cash hasn't come in yet. You can't value that. This cash hasn't come in yet. You can't value that. And again, I don't really want to argue about someone else's valuation present day, but if you had the position, like if your personal position was I will not value any of the future cash. I think the only way I'm going to value their cash is at 5 billion. I'm only going to look at their book value right now and I'm going to net out any of their operating book. So I'm only valuing their cash. I'm only valuing it 1 to 1 because I'm a super, super conservative investor. Then what I would tell that conservative investor is your valuation for GameStop is about to triple, right? So I'm saying my fair value for GameStop prices in the earnings that are highly, highly foreseeable, right? And I'm gonna say I don't want to, I don't want to wake up one day and oh wow, GameStop's suddenly worth 3 times as much. I want to say, hey, let me go ahead and get in while it's priced so cheaply because there is such a high clarity that it will continue to appreciate. And what do I mean by that? So let's look at after these convertibles are due, right? After GameStop pays back the whole 4.2 in convertibles, even if they don't dilute them, they pay them back in cash. They are still sitting on 12 billion in cash net of the convertibles, right? This is after they've paid back the convertibles. So if right now you think GameStop has only 5 billion worth in cash, well, guess what? That's about to be 12 billion by the end of this 7 year window. And you might say, oh, 7 years. Come on. Okay, well, if you value their cash at 5 and they're going to be valued at 12, well, that's 140% return right there just on their cash performance. And then do you think their enterprise would still only be worth 3 billion? Because if you think they're fairly valued at 3 billion with a trailing 12 month of $100 million of operating income, well, when that trailing 12 month is 600, does that mean that their enterprise value also goes up by 6x? right? Or do you think it would be less than that? I think the PE would be even higher than that if they execute the way they're projecting to execute, right? Because that implies such a high earnings growth, revenue growth to the business. But I'm projecting them, I'm just saying like they're going to flatline, right? I'm looking at the Q3, Q4, Q1, Q2. What do we know from basically the console cycle, which the console numbers are going to continue to rise for or like rise steadily, right? By the time that Switch 2 sales are coming down, the Xbox and PlayStation sales will also be ramping. And so you're gonna see, right, 3 billion a year in hardware for a few years. Software might continue to come down, but it's already so low. It's almost a non-factor to GameStop's long-term valuation. And then collectibles continuing to grow. And even if you, anyways, if you have a high bearishness on collectibles, the industry, I would just encourage you to look into it. But even if you felt like, oh, the value, what if the value of Pokemon cards goes down? It's like, okay, well, that means GameStop's also going to get to buy them for cheaper, right? GameStop is not a buy and hold of Pokemon cards. They are a market maker for Pokemon cards, but they don't actually make the market. But they they buy low and they sell high. And so the valuation of cards coming down does not threaten GameStop's ability to scale power packs. The only thing that threatens it is what if no one wants graded cards anymore? Not just for Pokemon, but period. Like what if graded cards are just like no longer a desirable product? And again, you can have that speculation and you can do that for any company, right? Like there's no company, I don't know what companies Tony likes the most, but if he likes Apple, it's easy. Well, what if people don't want to buy the iPhone anymore? And you start crunching numbers and you're like, oh my gosh, that would be so bad. And it's like, okay, yeah, that's why every company has a 10K that lists all these risk factors. Yeah, meteors could fall specifically on our stores and that would really stink, like the question, if you want to go a step deeper, is what's the catalyst that makes that what if plausible? Because if you're modeling a scenario that's a less than a 1% chance of happening, then it's not even worth baking into your valuation model, right? So why would graded cards fundamentally no longer have a market? I don't know a catalyst for that, particularly when inflation is doing what inflation is doing, right? So much money is concentrated in fiat currency, right? Don't even factor in stock market, bond market derivatives, right? 150 trillion in M3 money supply, another 31 trillion in gold and silver, another 3.6 trillion in crypto, right? Another 537 billion in other collectibles that are larger, that are harder to store, that are more expensive, sometimes that are you have to pay to insure, right? Much less efficient markets. And here's the graded card market down at 15.8 billion. So fundamentally, why would the demand for alternative stores of value decrease when inflation globally is continuing to do what it does, right? Debt levels are rising across the board for governments, for individuals, right? So if fiat currency becomes less and less of a dominant player, then alternatives are going to grow, right? They're just going to grow. And right now the alternatives is 0.24% of the store of value market, right? So it's just not fundamentally, I am not concerned about no one wanting graded cards anymore. But if you're concerned about that, I respect that, right? That's okay for you to think that, but that's not how I think, right? And but even if the cards market slows its growth, again, GameStop just started selling graded cards. They just opened power packs. So what's GameStop's market share right now of 15.8? And with their lockstep partnership with PSA, which basically has a monopoly on the grading service portion of the graded card business. Like, what does that imply for GameStop's market share moving forward? Even if you thought the card market was going to stay stuck at 15.8, right? They're going to keep growing fast and they're going to come back down. They're going to end up at 15.8 and just flatline at 16 billion in annual sales for the graded card market. Okay, well, we're talking about graded cards being a fraction of a fraction, right? GameStop potentially doing 1.5 billion, and that includes all their other collectibles as well. How much of that is graded cards? What if it's a whole billion worth? Okay, well, the US graded card market is 15 times larger than that, and GameStop by far, it's the only nationalized retailer that's even in the space, right? So their ability to grow their market share, even if the market isn't booming, is still very high, still multiples from where it is now, right? I'm talking a little bit jumbled. Sorry for going too fast. My main um my main like thing I wanted to communicate if someone watched this and was like, "Man, what does Jeremy think?" is basically just that if you call GameStop fair valued at 9 billion, that your price target for GameStop will be increasing in short order, right? If you say that they're only worth 5 billion in cash, you don't take the present value of future cash. You just say they're 5 billion. Again, they are generating cash far in excess of what they owe, right? To where even after they pay back their convertibles, they have 12 billion in cash, right? So 7 divided by 5, it's 140% return on just their cash, right? It's a $7 billion gain on just their cash. And then enterprise value, again, if in 1 year this goes from 100 to 600, which I'm saying if, okay? If you want to call it 4, if you want to call it 5, you can do your own modeling. But what does that mean for their enterprise value? At the very least, if you think this is fair value, then correspondingly, enterprise value would grow in proportion, which means this enterprise value would grow by 4 or 5 or 6x, right? So you have a $15 billion gain on enterprise value if it 6x's, and then over just maybe 1 year of time or 1.5 or 2 years of time, right? $15 billion of enterprise value gain, and then a cash flow that is rising every single year up to 140% gain over the life of these convertibles. And then what happens to your PE? If cash is coming up, if operating income is skyrocketing, and even if it flatlines after it skyrockets, right? What type of PE do you give that? It would probably start to tick up if, again, you're seeing that growth, particularly if you see that growth continue, right? So if someone says GameStop right now is fairly valued at 9 billion, all I really have to say is, okay, well, just be prepared to wake up a year from now saying that GameStop is fairly valued at 18 plus 8, or 18 plus 6. And if it's fairly valued at 9, but there's a high level of clarity that a year from now it's going to be worth 20, then it's like, well, maybe I should buy some. You know what I mean? Like, not financial advice, but that's that's kind of the conversation I wanted to have is it's a little bit semantics if we just want to talk about trailing 12 month, because the coming 12 month is going to make the trailing 12 month look obsolete. And then we have the conversation on how do you value this, right? How do you value the new GameStop, right? How do you value the Power Packs business once we have more clarity on the revenue growth, especially once we see like Q3 of 2026 come in? I'm very interested to see the year over year growth numbers after we already have a quarter of Power Packs in the books. Likely for Q3, it's still going to be like Q3 of 2026. is likely still going to have a decent bit of growth from Q3 of 2025 because Q3 of 2025 it was only in beta and it was only Pokemon and football, right? So you think about that a year from now, adding in baseball, adding in basketball, adding in maybe other things as well that they feature, and then it not being in beta, it's like, well, the growth numbers are still going to look pretty impressive even from here year over year. What about from Q4? What about Q1 of 2027? Like, when do we see the growth slowdown happen? And for me, as I think about the collectibles business, I'm just imagining that they can maintain a 30% growth for 5 years, and then they basically just flatline in with the overall market. And I would give that a 45 PE because you break even faster. You can watch you can watch my other video on that. But your break even is 2 or 3 years sooner than the 30 PE you would pay for the SPY because of those 5 years of 30% growth. I'm not saying this is absolutely a no-brainer. Like you could argue that this won't happen, but I would argue that it would happen. And so again, my fair value takes into consideration the future that we can reasonably project. And I think Tony's fair value mainly just looks historically. And the only thing I really want to say is that, like, to each his own, but history is going to improve pretty soon, right, over these quarters. Um, the other thing I want to say is, I said like we know that we know the convertibles are going to dilute, and Tony said we don't know that, and I think Tony probably has dealt with a lot of GameStop hyper bulls and pumpers on YouTube over the past however many years he's been YouTubing. But I don't say that we know they're going to dilute just because GameStop feels like it, just because GameStop wants them to dilute, or just because um, it would be nice for a narrative. I'm saying their actual cash generated is it leads them to an excess share price from the actual conversion prices. And again, okay, so if you want to say, well, we don't know that, right? Because you're baking in income from operations that we don't know, I'd say, okay, we're talking about semantics, in my opinion, at that point. Like even if you wipe out all of the Bitcoin, which is not reasonable to me as far as projecting, you're still above these conversion prices. If you wanted to say like even more conservatively, I could say that, hey, the first 1.5 billion might need to be paid back in debt. Like the first 1.5, maybe they just need to pay it back in debt because the strike price on that convertible is higher, the conversion price. So it's 29.85 and it's 2 years and a couple months sooner compared to the 2.7 that's $1 per share cheaper of a conversion price and 2 years later. So I would say like 99, like a huge percent chance that GameStop has more cash per share than $28.91 in June of 2032. If you want to say, well, but maybe not for the first one, okay, fine. Maybe they have to pay back that 1.5 billion. Maybe it doesn't dilute. But regardless, the main conversation is what are they going to generate between now and then, right? And whether they pay it back or they dilute, it doesn't really matter if, oh, in 5 years, I'm going to owe $1.5 billion dollars. It's like, oh, well, in 5 years, I'm going to have generated $4.5 billion dollars. That's why I don't take the convertible. For me, I consider their cash floor their actual cash floor. And if these convertibles happened to threaten to lower that, then I would lower it. But the reality is, by the time these convertible debts are paid back, their cash floor just rises. So it's kind of to each his own. Tony and I are basically saying the same thing. I'm saying I have a higher level of clarity on what they're going to do moving forward. Like I feel very comfortable with around a $600 million operational profit, and Tony doesn't, and that's fine with me. But but If you say it's only worth $5 billion now, you're just saying that, well, then they will be worth, right, $12 billion in, like, by the time that this generate, like, once this time actually passes, you know, which you could say, I have no clue that this money is going to come in. Again, I'd say, great, I'm not gonna, like, I don't have to change your mind. But if you knew that a good portion of this money is almost definitely going to come in, then again, you'd say, man, I get a double, I get a 140% return just on their cash, right? Even if we're not valuing the business, we're not talking about PE. But then again, if we keep the same PE, you're talking about a trailing 12 month that's going to go up from 100 to closer to 600. Well, shoot. It seems like the fundamentals of GameStop have finally inverted the GameStop story. So, um, anyways, I did want to speak to that I feel like there is a very, very high level of clarity these will dilute, or that GameStop will have the choice to dilute them, and that they only wouldn't dilute if GameStop chose not to dilute them. At the very least, for the June one, if you wanted to argue about the April one, I'd say, hey, fair enough. Maybe they will have to pay that one back in debt. Maybe they won't be over $29 a share in April 2030. I'd be willing to concede that point. But I would just say it's basically a moot point. Like, whether GameStop dilutes, and after dilution they're at 28.09 a share in cash, or whether they pay it back, and they're at 27.89 in cash. It's like, okay, we're talking about a 10 cents per share difference. So if you don't want to price in that dilution, or if you do, to me, it doesn't affect the way I would value GameStop meaningfully. Um, I think that's pretty much all the main points. Tony's saying, hey, you shouldn't include this, which I don't know if shouldn't is really what he said, but he wouldn't take a present value of future earnings of cash. He wouldn't offer a P. I talked about how over here, after these Q3, Q4, Q1 numbers come in, you see this cash floor rising, and you see the trailing 12-month growing. Well, if GameStop's still at 21, the PE is plummeting, right? And I was saying the PE should probably be growing from 29, right? I was saying a PE around 40 at least would be reasonable, which I stand by. But Tony said, hey, that's a little rich for me. Again, I don't really have an argument. Like, I don't have a, I'm fine if someone does not value GameStop the same way, but it'd be basically impossible to say that a 4 PE is fair if in 3 quarters' time they have quintupled their trailing 12-month operating income. And I think Tony would agree with that. I think Tony would say, man, if GameStop actually does what this dude Jeremy from Budget for Life is saying, then yeah, they're going to be worth more, right? And if he would concede that point, then I'd say, like, that's all I really care about. If he wants to wait till it comes in and then he bakes it into the evaluation, great. I'm saying I have a high level of clarity that this is the direction the company's going, and so I'm willing to bake that in to the current valuation. Because if you waited until all these numbers came out, well, guess what? They're not going to be at $21 a share still. They're not going to be a $9 billion company at the end of Q1 numbers getting released in June or May of 2026, right? This will start to get priced in if it's inevitable. Now, is GameStop inevitable? Well, GameStop's existence is inevitable, right? Their bankruptcy is no longer on the table. And does that mean that the shorts having to close is inevitable? Yeah, I guess, right? Like, they probably can't, but they maybe could trade it short forever unless GameStop's appreciation is inevitable. And I would say until Q3 numbers come out, if you want to argue that it's absolutely not inevitable, that yeah, they're going to make some money on consoles, but their software is going to keep coming down. And what's going to happen after those console cycles, right? I still don't want to give it a high PE. I still don't covet this business. That's totally fair for now, but it's about to become an obsolete talking point, in my opinion. Um, okay, I think that's all. If anyone is a Tony disciple or a fan follower that watched his video and has other points he made that I didn't speak to, or other questions that you want me to speak to, um, feel free to drop it in the comments. I wanted to give this a response. Tony, again, thanks for the video. Sorry if I came, hopefully you're not taking anything I'm saying personally. I know sometimes I get excited about the company, and then maybe from your perspective, that kind of like dilutes my level of rationale, right? I'm just seeing things through a hyperboles lens. It's not really my goal, right? I want to maintain a level-headed perspective, but I think both of us have a similar perspective in some ways. But me just being much more willing to project a future earnings growth, not on hope, but on what we actually see and what the company's actually saying. And Tony being more conservative, saying I want to see it before I can believe it. Um, and that's fine with me. Of course, I don't care what anyone else like does with their money. I'm not like here to tell you to do something and then you're going to be rich, right? Um, but certainly attractive the way that GameStop is valued right now. If you say it's fair valued right now, then you are also saying it is about to triple or quadruple in value, or I should say like double or triple in value over the next 12 months, basically, if GameStop's fairly valued. So the argument that I would be more interested in arguing is if you think that right now GameStop is grossly overvalued, right? If you think a $3 billion enterprise value is ridiculous for GameStop and it should be way less than that, it should be only a 5 PE forever. I mean, I guess I'm not even interested in arguing that because then it's just like out of touch with reality. Um, But if you think GameStop's around fair value right now, that's great with me because again, it's going to age. It's going to age pretty well from current valuations. Um, because these valuations are based on a cash floor that's basically guaranteed to grow and a trailing 12 month that's guaranteed to grow, right? And so if you think the PE is fair, well, when you bake in even more growth and even more growth on the top line and the bottom line and the balance sheet, then again, you're gonna see this enterprise value grow. It's just um, not that hard to do. Okay, I need to wrap this up. I said every point like 6 times because I wanted to make sure I actually said them. If you have any other thoughts, questions, comments, if you watched this video, drop them in the comments below. Appreciate y'all's support. I'm excited this week to dive into my big margins project with you. Learn some super awesome stuff analyzing 10Ks all the way back to 2007. I mean, it's been crazy, the research I've been putting in. I'm excited to show you guys soon. That's all I got for y'all in this video, though. I will see you in the next one.